Gravity. Cue the wicked song. My daughter's singing it over and over and over again. Real quick. All right. We got here a little early. Usually I kind of just freelance and screw around for a couple of minutes trying to catch my bearings, but I've been up getting blood since 6:30, and I drank about a quart of coffee. So I'm ready to roll, and I hope you are as well. The good on this PPI report, and this was a very important one, is minus 0.3% on final demand. Goods fell, easing input costs, but final demand month over month increased. Why does all this stuff matter? Well, a couple of moving parts here. One, gasoline prices down relatively sharply, 5.5%. Energy index declining. That is a big drag on the headline, and that is much needed right now. In addition, food prices retreating after volatile months. Now, once again, they strip out energy and they strip out food, because why measure the things that you actually need when doing a government report? Well, let's get rid of housing too. Who cares? But meanwhile, services continuing to jump. And once again, the stuff at the beginning of the supply chain. Remember, this is not wholesale prices. I'm just going to point that out because you want to see me get a little amped up at around, I don't know, 8:47 in the morning. Watch CNBC call this wholesale prices. These have not been wholesale prices since 1978. That said, the price of origination of very specific commodities does not impact domestic prices the way that people do, because a lot of this stuff actually ends up in foreign countries. All right, rant over. Trade services increasing by 2.5%. Core PPI. Really, the only thing that matters is whether or not mellow corn went down in price. 9 months in a row, consecutive rises in core persistent pressure. So it still remains there. Good morning, Art Jacobson. Jiggin. All right, here's the wow. Search and navigation systems going up 15%. What does that tell you? Defense demand. And once again, this is a nice little clue for you of where capital is rotating and where money is rotating and where demand from the whole supply chain. Gee, can you say KTOS and Lockheed Martin and all those other names? Yeah. Significant focus here. Oh, and by the way, what does this go back to? Drone warfare, which we've had a long conversation about. What is all the search and navigation focus on again? It ain't for Uber. This is a defense play. Pro commercial equipment wholesaling margins are up. System software publishing has collapsed, and you already knew that was going to transpire. Here is your AI story. And raw milk down. All right. I don't know why we're celebrating that. Who cares? All right, moving on. Let's dig into momentum. We're still red, even though we had that nice little pop yesterday. We actually moved back to equilibrium for a very short period of time. And just to give you the quick update, the quick number, the quick refresh, we're at -7. Our cap is at 3.1 negative. So we're actually showing some bearishness heading into the beginning of the morning. After yesterday's pop, Russell moving up to 265 on the IWM. We're doing this whole thing again, right, where everybody gets all amped up over one specific day, and then, it ends up being exactly what we talked about. Lower highs, lower lows, institutions looking to sell. Key things to be watching this morning again. This is a hotter than expected PPI print, 2.09 year over year. So inflation elevated, all that focus again back on what's going on with the Fed. Again, I don't care about Fed funds rate. I care about the SOFR, the secured overnight funding rate, because that's where the repo is sitting. That's where the pressure in the financial plumbing operates. But we'll go from there. Mara's up this morning. Dell's up this morning. A lot of focus right now on some of these other AI plays. It's going to be a lot of wild swings. And the beauty of a day like today, a Friday, is that you have a lot of opportunity to trade short duration, options that expire today, looking for very liquid options, and looking to play volume-weighted average price. And if you don't know what volume-weighted average price is, you got to be here more. We're going to do a little bit of focus on this today when I am live in the afternoon. I believe I'm at 1:45, but I never know until somebody just kind of pokes me or my phone goes off and they say, hey, you're 2 minutes late, Garrett. You need to be on air right now. IWM minus 96.36. NASDAQ down 4. And this is just the nature of this market. There's a significant amount of chop. We are rotating between these bands of 670 on the S&P 500 ETF and 690, 695. And I'm going to show you in a moment, after we do the runner, what is actually happening to this market. And I think that this is one of the more important conversations that I've had. I tried to assess what would happen to the S&P 500 if there wasn't all of this monetary support from Japan and the United States. I did it for an hour, and then I gave up because it doesn't matter how good you are at math. This is an impossible equation, and I quit. Software short exposure hitting a 7-year high. Software long exposure at a 7-year low. And then what happens? It goes up. Well, the long trade of the last couple of months, one of the most successful pair trades was long semis, short software. So right now, what we want to be paying attention to is this key line of $84 on the IGV. The IGV is the software ETF. And hey, this thing took a lot of pressure over the last couple of weeks, right? So lower highs, lower lows, that's been the trend. Bouncing lower, popping, getting a little bit of a squeeze, a little bit of optimism, and then it sells back off again. It is a reminder that when it comes to markets, particularly in these kind of negative momentum environments, what happens is you don't have a straight line down. Markets don't just go like this. They go lower highs, lower lows. And what happens is these institutions use any short-term pops to sell back into pressure. And that's why it is important to always keep an eye on volume-weighted average price. That blue line that we talk about, that equilibrium line, that is where buying and selling tends to transpire. That is where our focus is because that is the fair value of the day. We've seen more pressure here. We've had a lot of banks come out and say, hey, the worst is over. The worst is over. The worst isn't over. I mean, come on. We just had a report this morning that Bloomberg terminals are $24,000, and there's chatter about whether or not you can just make one with ChatGPT or with Claude. And some people are saying, oh, no, that'll never go away. There's too much trust in the Bloomberg brand. Really? Is that what we're going to do? We're going to go with that? Guys, that doesn't matter. It's all the same data sources. I can replace all of my SEC things that I've been working on for years. I can build it myself now. And I will be the decider of how valuable the data is. So everything is certainly under pressure right now. Everything. And the way that you have to focus on this, and the way that if you're trying to short any of these names or you're trying to go long these names, you better have a deep understanding of technicals. You better understand how RSI works, the relative strength index, the money flow index, MACD, expected moves, monkey bars. All this stuff matters because this is not going to operate simply on the range of how institutions and human beings operate in this environment. It's how algos are going to operate. It's how gamma is going to work. It's how institutions are going to protect key zones, what brokers are going to do. There is a lot going on here, but there is a lot of money to be made if you take the time to learn this stuff. And right now, that key line of resistance, that key line in the sand is going to be 84 because once again, lower highs, lower lows, down channel, the way that this has operated for the last couple of days and weeks, we had a nice little pop. We had a bunch of optimism around this. And now what happens? Well, we're rolling over a little bit again. Don't just trust the headlines. Focus on what price is doing because price tells the story, not a media outlet that is, again, just following the equity price and then trying to report on it and then trying to find a narrative. Okay? Software has beaten semis this week. That hasn't happened in a while, but I'm just going to remind you that is kind of the way that squeezes work. Right? There's been a lot of profit taking in this position in the last week. And yes, we had a huge move yesterday in software. It was the largest move, I believe, since November 2022. It is a big leap of faith. That's why you have to focus on those technical levels and those resistance levels. The big story, once again, is going to be what is going to happen with Iran. Okay? So Don's going to drink a bunch of White Claws in 30 minutes and give us a Bloomberg terminal. I'm reading that wrong. Open Claw? What? Okay. White Claw. Don's going to drink a bunch of White Claws, and I can't read. It's too bright. Remember, we had all these dark screeners. We made them bright now, and now I can't read anything anymore, but people were telling me that they couldn't read the dark charts. So now we've got bright screens hitting you in the face like caffeine. This is your Folgers Crystals every morning. Military track. Trump convening senior advisors today for detailed Iran discussions. Not whether a strike would occur, but its scope and potential targets. The options are nuclear facilities, missile sites, state institutions, and infrastructure. Rumors that certain people are living in bunkers there who are in power. The Geneva talks have concluded, no deal, but a lot of openness, creative ideas, however you want to define that. There will be focus on Oman this week. Iran has threatened soldiers and equipment. Okay, U.S. authorized departure of embassy personnel from Israel. Crude is firmer. We are going to not have an answer on this today. But if there is a strike on Friday, or on over the weekend, and it is significant, and it leads to missiles flying back at aircraft carriers, we're going to be risk off on Monday. And oil prices are going to move higher, and the premium is somewhere between about a $10 and $15 level. But I'm going to tell you right now, I don't speculate on this stuff. I just don't. And once again, if it is smaller than expected, watch oil prices fall. This is what happened last time. So I don't like to try to speculate on this. I do focus on the premium. I would say, remember, if you're going to do anything, cut out the noise and focus on where there is opportunity. We've been trading TPL. We've been trading Landbridge. We've been trading the pipeline companies. I've talked about Blackstone Minerals. BSM, which is dirt cheap and has quality value, and it looks like momentum, hopefully returning to the stock soon. Stay domestic. Don't focus international. Sell spreads. Don't try to chase to the upside. Take what the market is giving you, and then anything that occurs is just additional assistance in the market. The tech sell-off is obviously in focus. NVDA not doing good. And I beat on every single metric, but once again, that is the story. The purpose of the market is to sell. Profits were taken. The narrative is beautiful, but once again, the financials are hit under MFS exposure risk. Again, all of this stuff remains the same. None of these risks have gone away. But Dell had a blowout, and this is important to note, the way that Dell has moved. This is a stock to definitely now keep on the radar. Remember, I did a whole thing yesterday about momentum. And we talked about how price discovery takes time. So here's Dell, big move up, nice pop up to what are we, 135 right now? And let's go back 180 days. This was back at 170 recently, and the orders are monstrous. The trend, this can get post-earnings drift. And what you're going to see is under that world of efficient market hypothesis and everything that we were taught in finance in the 1950s before I gave up on that, once again, the drift can take this much higher. So it is a question of how do you manage it? And maybe you set tight stops or you anchor back to this level, back to where the announcement was made using volume weighted average price or using a multi-day VWAP or using a multi-week VWAP. Look at where we sit compared to that high of 170. And if we continue to break above a multi-week VWAP, that can tell you that the drift and the momentum is returning to the stock. There's opportunities here. And this stock's going to either settle probably in the next 2 to 3 months, somewhere between 150 and 155 or back down at 110. But you simply have to watch the momentum as it comes. All right. On top of that, let's get back to the ye old business. Block. All right. Real quick. We're going to get to the runner. I know, it's 9 o'clock. It's all going to be okay. Block's up 20%, not 30. It was up 30% at one point. It spiked and then bleh. But, all right, we're up 20%. Biggest move since the IPO. Big job cuts. They're cutting 40% of their business. And this is Jack Dorsey doing this. This isn't, the CEO of a company that you've never heard of. Dorsey created Twitter. Dorsey goes on, creates Block. And they've cut 40% of their business, and they let go of everybody at the same time rather than doing multiple rounds at the same time. That's actually the way to do it, right? Because the way that it happens, if you do down rounds 3-4 times, it just crushes morale in your business. So they're going to consolidate. And this is going to give permission to everyone to do this. It's Dorsey doing it. If it was Zuckerberg doing it, sure. If it was, that would have been fine. If it were, I don't know, who's the CEO of Dell? I couldn't even tell you. If it was Dell, the market might act a little bit differently. This is going to create a lot of debate this year. This is not going to be the political debate of 2026, but it's going to be in 2028. So once again, look at all of these companies that are running very high, very efficient businesses, extraordinarily high profit margins. They look healthy. They're doing great. This is going to be the trend. And this is going to continue well through the end of the year. We're going to get up. We're going to see. Again, Amazon just made some cuts. We saw some cuts with Cigna today as well. This is going to rip through the economy relatively quickly, and it's going to open up a lot of questions about what's going to happen with monetary policy next, which we'll discuss. Finally, China is printing money, everybody. They're printing money. They have cut their FX reserve ratio to 0. Great. That's effective March 2nd. That is designed to slow yuan appreciation to support their FX market. They're trying to keep their currency from rising right now. Now, why does this matter? It matters because they have a more active fiscal policy. It is domestic production. It is a domestic focus. This is positive for AI and EV and their grid. Keep an eye on copper prices. Keep an eye on lithium prices. When they do these things, it is bullish and provides a floor or support, not necessarily a price floor, but a support level for metals, mining, other materials. In the United States, when we engage in some level of fiscal support, it helps our private credit business, our private equity business, our insurance companies, and of course, our regional and financial banks, our larger banks, financial banks, larger banks. In China, because they are a production-based economy, a manufacturing economy, that helps support manufacturing and prices there. We're financialized. They are producers. UK crisis labor market. There's a lot going on over there. There's no way to actually trade it, but it is just important to note. Green Party won, Gorton and Denton, Reform Labor and Labor third, Reform second. There are some problems over there that we'll be discussing. UK consumer confidence is under pressure. This is going to remain an issue in Europe because we're going to start to hear a little bit about private credit problems in Europe and repo problems in Europe and dollar crisis in Europe and euro dollar crisis, offshore dollar markets. That's all going to start to lead up later this year. All right, 9:05. Something about White Claw again, Don? What? It's all going to be bad. Ooh. Yeah, how is White Claw going to use Claude? That's the question that matters. KMI, Ford, and Apache. Well, APA. I'm just changing their names. What a bunch of jerks. All right. Stocks to keep in mind here. I'm going to just start with the watch list. We're going to start with CoreWeave, JOBY, and Block. And the reason for that is we're going to see some action today on Block. We're going to see it across a variety of different places. And one of the places that I'm focusing on is volume weighted average price. XYZ. What a dumb ticker. Who thought that up? Don't do that. Block, big pop this morning. Obviously, there's your move from yesterday. And if we're going to anchor anything, we anchor it to the high from yesterday when the news was announced. But moving into today, if we see some selling, pay very close attention to that fourth standard deviation line and that line right here. Right here is your volume weighted average price. We haven't blown out yet. We haven't seen much of a move yet, but we're going to be looking for different ways to potentially anchor this. So let me jettison this. Anchored, volume weighted, anchored VWAP. We did it. Look at that. All right. So we go to yesterday. We go to the 26th, or forgive me, the 2nd to 26. And we do this at 1622. All right. So anchored volume weighted average price is well above actual VWAP at the moment. And if we get a reversion, we're actually looking for a move back to VWAP at 64.86 or back to actual anchored VWAP, which would be from the close of yesterday. This is the high. That's the announcement. When everything came through, any institutions that were buying up here, well, now they're underwater to start this morning. So we're looking for a move from here to here. We get a reversion here. Look, that's going to be your key line, a possible move to 66.45. And the beauty of this, the key thing here is options expire today. So big move, obviously, in pre-market. This can sell off as well, but if we just find ourselves down in that third band, that's where you want to be. CoreWeave, another name in the world of AI and job destruction. CoreWeave selling off. This is from yesterday's low, so I don't need to really do anything with that. But CoreWeave, another name to focus on today. Again, everybody reporting options. Everybody with options today. A lot of expiration. Anything that's liquid. Look at the NVIDIAs of the world. Look at all the companies that are obviously have expiry today. NVIDIA selling off to start the morning. Down here at the 180 level. Further you get away, the more likely you are for a reversion, and the fact that it is Friday. Ooh, it's Friday. I'm in love with VWAP. JWAP. Jobby. JWAP. Sounds like a bad, same thing, right? JOBY Aviation in focus, back down to $10. That's a good company, by the way. All right, on the positive side, we got Johnny Ford. Who? Johnny Ford. Big insider buy on the Ford Foundation a couple of days ago, and that's exactly what you would anchor yourself to. It's the moment that announcement was made. Ford Foundation buying, I don't know, uncomfortable amount of Ford stock, and the market has not cared since at all. There is your pop on the backside of this occurring, and that's basically where I want to anchor VWAP 2, because there was a lot of excitement, a lot of buying, and now nobody cares. We've pulled back from 14.79 down to 14.29. Now, what we want to do here is anchor that. If this feels like working, I guess it doesn't want to. Let's get out of here and let's go over somewhere else. Hell with it. KMI, Ford, and Apache. Look, I'm just going to point this out. KMI is the best. And while everybody is acting out right now, trying to figure out what's going to happen with software, we continue to ignore all of the energy storage that is necessary for the AI trade. Who do you think's going to win? It's Blackstone Minerals, it's Kinder Morgan, it's Energy Transfer, it's EPD. Guys, I can't beat this drum any harder if I tried. KMI is showing a lot of strength, 11.2% move in the last month, 122% move in the last 3 years, and it just keeps bleeding higher. Apache, same thing. This stuff's showing up in these lines as well. Look at Netflix, by the way. Talk about a rebound. Holy hell. Good job, Professor Bierman, on that one. Had Netflix. Netflix was over here 2 weeks ago. Now it's over here. And look for that to continue trend as well. Look for momentum to continue to return back to Netflix. Look for some profit taking along the way, but very clean. Macy's, Sale, and CrowdStrike. I was mocking CrowdStrike yesterday. People were wondering when we were doing that session, what was the stock that I was talking about that was trading at 20 times revenue, unprofitable? It was CrowdStrike. It was always CrowdStrike. It's been CrowdStrike the whole time. People are trying to crowd into. Sorry, I'm an idiot. People are trying to go back into these stocks, and once again, what's the lesson, everybody? Lower highs and lower lows. So it gets a pop. People try to convince themselves once again that the worst is over because $40 moved. That's a what? 10% move? Okay, cool. And then what? It'll fall another 20? CrowdStrike looks bad. Unprofitable. 20 times revenue. Negative margins. still trading at 20 times revenue. It is down 35%. How far can this thing go from its peak? I'm going to tell you this. I'm not going to buy this stock unless there are two situations. The first situation is that the Federal Reserve starts to actively print money aggressively. The second situation is that this stock falls 75%. 75% from its all-time highs back at the top of the liquidity cycle. These names are going to get beaten up. These companies are under a lot of pressure, and you can try to convince yourself, oh, we need cybersecurity. Yeah, but we're also going through valuation compression right now. And the downside for software is 5.5 times revenue. We're at 8. Just going to point that out. Macy's, who cares? Macy's. Pfft, Macy's. CrowdStrike, put spread to the downside. Macy's, put spread to the downside. Sale, I'm not even looking that up. I got other things to do. All right. What happened? Oh, I knew I made these slides. I'm sitting here freaking out. All right. Hey, this is the fun part. This is the last 8 minutes. This is where things really shine. Last night I sat down for about an hour and I tried to figure out what would happen if the United States government, the Treasury Department, the Federal Reserve, the Bank of Japan, and the Foreign Ministry of Japan were not engaging in active stimulus or support. Where would the S&P 500 be? I had a worst case scenario at 18% from here. Now, I will tell you that was based on a handful of different academic reports that look at 3 to 5 percentage points per $100 billion in support. And that's a raw number. And to be honest with you, I have no clue. I legitimately cannot do this math. And a lot of people will say, look, I've got a model for this, and this model says X, Y, Z. And there have been plenty of these models that have been put out since, what would have happened if the Federal Reserve hadn't injected trillions, hundreds of trillions of dollars, hundreds of billions of dollars. I don't even know. These aren't even real numbers anymore. Back during QE1, QE2, QE3, QE4. There are metrics, and at best part, they're guesses, because you have to put a number of assumptions into the models, and then you get a number, and then you do a book tour, and you go on CNBC, and you say, well, it would have been so much worse if we hadn't done X, Y, Z. Okay, well, we can't really quantify any of this, but let's just look at what is going on in this market. We are within striking distance of all-time highs. The S&P 500... the SPX is at 6,900. Okay, the 52-week high is 7,000. So we're within 100 points, which is basically a good headline away. Now, let's explain real quickly that this is not earnings. This is not valuation. This is a $650 billion support system that has cycled through this economy since October. August. They cut quantitative tightening, so $60 billion a month in bonds are no longer hitting the market, right? They did reserve management purchases, so that was supposed to be $40 billion. Cross-border capital actually puts it at 55. So they're doing more than initially they had announced 20 billion. Then they went to 40. Now it's somewhere around the 55 billion. And they're saying it's not QE. They uncapped the emergency window. There was $500 billion a day. There's no limit now. There's been 3 rate cuts. And the leverage ratio changed. They freed up $219 billion at the 8 biggest banks to allow them to buy treasuries. And I completely forgot that happened, because I'm too busy losing my mind over the other stuff. On the other side, Japan has moved above that 40-year yield above 4%. $41 billion in bond values were destroyed in a day. Their response has been to cut long-term issuance to a 17-year low, rewrite accounting rules, $86 billion in losses, stop hiking rates, personally pressuring the BOJ, and injecting $117 billion in extra spending, plus changing the rules for the accounting markets. $170 million in trade triggered a crash in a $7.3 trillion bond market. So the problem isn't the trades, it's the market itself. And why does all this matter? Because once again, private credit's under pressure. Bank exposure is under pressure. Blue Owl is under pressure. And Fed liquidity is up 5% since the beginning of the year. 20% annualized over 6 months. Injecting, according to them, I had 650. They're saying 525 billion in extra liquidity in 3 months into the money markets through policy actions. So they're not just running monetary policy, they're underwriting the debt market. And this is why we get into this debate. You have to be bullish or you have to be bearish. I'm trying my best to be bearish. I'm trying my best to look at this and say, guys, this should be 15 to 18% lower right now. But they are engaging in a significant amount of support. And the funniest thing about this, and I don't use the word funny as in haha, I mean, oh hell, it's still blowing up. It's still blowing up. So remember, Powell went out. He made all those statements. He talked about SOFR. He talked about repo. They saw this. They knew what was happening with Japan. They've known what's going on with private credit. None of this stuff is new. And they're providing a ton of support, and our market is still highly range-bound. And where we sit right now, right, every support mechanism in this market is being deployed right now. The Fed is buying. The emergency window is uncapped. All this chatter about, hey, we're going to tighten. We're tightening. We're tightening. We haven't been tightening. We have been injecting support. And what would this market look like with $650 billion without that money? The real question is, what if this is not enough? And what do they do next? So right now, private credit risk is still elevated. Defaults are rising. We're expecting, or UBS has said 15%. That sounds a little high, but let's just go with an even 10. That's a problem. U.S. equities, the banks are starting to change their expectations for the year. Remember, everybody was at 7,800 to 8,000. Now it's starting to be 7,000. It's starting to shift. People are seeing what's happening on the backside of the tax season, and the expectations right now remain the same. Nothing. Just going to sit and do nothing. A lot of rotation out of tech and financials. They're the ones that have been under the most exposure and the most challenge to momentum, continuing to break down. Crypto is not going anywhere, and crypto is not going anywhere unless they significantly increase liquidity. Remember, crypto winter is tied to monetary cycles. It is a relief valve for what happens when they print too much money. It ends up in crypto and it doesn't end up in our food. Where money is rotating, it's going into resources, energy, utilities, staples. I've been beating this drum for 3 months. It's still there. Gold and silver's got to continue to provide support. And once again, hedge funds actively screaming into Chinese stocks right now. Look at the momentum names that we've talked about. Look at companies like Weibo. Pay attention to Alibaba. Pay attention to these names. Ask Gianni 1,000 questions about what's going on there, because he has been focusing on this all year, and now that time seems to be emerging where there's going to be a lot more activity and a lot more focus on places like Japan and China. As our liquidity cycle tightens, China loosens, and that creates opportunities for the weeks, months, and next 18 months. All right? Now then. Cool. It is 9:20. Nothing crazy going on today. I did get around to some questions yesterday, so do me a favor. I've cleared my queue. Support at TheoTrade.com. Put Garrett in the subject line if you have questions. We'll throw the slides into the chat in a moment. If you have any other things, make sure that you take the time to join us every day, right? Join us from 9:30 to 4 o'clock. A lot of opportunities, a lot of activity. Friday is a great trading day for volume-weighted average price, expected moves, monkey bars, everything that comes with it. And then we're going to start to position ourselves accordingly for triple witching, which is in mid-March. I hope everybody has a great day. Talk to you soon.